Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from the SALT Conference in New York City. Joining me for this segment, we have Anthony Scaramucci, founder and managing partner of SkyBridge. We're going to discuss key themes at the conference, the state of the economy, investing for the long term, and of course, future of digital assets. Anthony, it is great to have you with us. Welcome to TradeTalks.
Thanks for having me, Jill.
Let's talk about SALT. You started it in 2009, which is really interesting timing to be that forward thinking. What was your vision and what are you most proud of?
I'd love to tell you there was a vision. I thought we were going out of business, so I'll set the scene for you. SkyBridge started with $330 million in assets. We got it up to like $450 million, and then the crash came in 2008, and all of the Las Vegas conferences canceled. All the big banks were told because they received TARP money that they couldn't go to Las Vegas. And so there was an opening to create a conference for a small business like ours, and so we created SALT. May of 2009, and 14 years later, we've done the conference 19 times. A few times in Singapore. I know you're going to be in Singapore with us this coming year. Tokyo, Abu Dhabi. But after COVID, we decided to move the conference, at least the North American piece, from Las Vegas to New York, because we thought it would be easier for people, less travel, less hecticness, and it's worked out really well. We get a tremendous amount of higher quality capital allocators, and I think a broader diversity of speakers by being here in New York.
I would agree with you, and I think the way it's set up is very thoughtful, very purposeful. It's focused on meetings, which of course, that's what people want to come here for. What were some of the highlights for 2023?
Well, for me, I think the big highlights are what's going on in AI. I know it's a hot topic, but I think people like me, my vintage, turning 60 this coming year, I got to get up to speed fast on what's happening because that's a very big part of the future. So I was impressed with that. I had the opportunity to interview Alex Rodriguez and Mark Lazary from Avenue, talk about the sports business, what's going on in the context of ownership in sports and how it's really transitioning and being thought about as media companies. And I think those guys were brilliant. They talked a lot about resilience and how to stay in the game. Of course, we have Anita Dunn coming here later today. She's the White House strategist for President Biden. She was his senior campaign manager in 2020. She's going to talk a little bit about what's going on with the debt ceiling, so we have that coming up. But yes, a very eclectic, interesting. What I would say about my team, which I love, and I'm very grateful to my team, is they try to curate the conference in a way where, okay, a busy person that can learn about a lot of different things can come here in a few days and pick up some good stuff. And I think you do a very, very good job of that.
Let's switch gears, talk about crypto for a moment, because you've been an evangelist for the asset class. Do you still maintain?
Long and wrong. I've been long and wrong.
Well, I guess it depends on your time frame, doesn't it?
Right, exactly.
Do you still hold the same conviction?
I do, and somebody asked me a really good question, because we're having a great year, great start to our year, best four and a half months that SkyBridge has had since 2012, and somebody said, well, what did you do? Did you change your positions from last year? They had a terrible year last year. I'm a very upfront person.
Right.
But no, the answer is we hung in there. We're long Bitcoin and Ethereum. I have a collection of great hedge fund managers. The debt ceiling issue, what's going on with the Fed, the inflation issues are impacting everyone, not just SkyBridge. But I'm just telling people, just get in good quality assets and be patient. I think after riding through 9 bear markets in my 35-year career, the best thing you can do for yourself is a little less, do nothing. You know, there was a great article a few years ago that the best performing assets at Charles Schwab are the dead people. You know why? Because the dead people don't look at their portfolios, okay? They're dead. And they seem to just levitate because they're in good quality things. And so my message to people is just relax and stay in things. Bitcoin's going to have a big run over the next 3 years, especially with the halving cycle coming in April of 2024.
You know, Anthony, it's interesting when we're talking about the economic downturn. I could tell you whether I had VC on the show here, whether it's commercial real estate, whether it's private credit and consumer credit. That was another hot topic here this year. I'm hearing the same consistent theme. A lot of people here on the institutional level, they've traded through .com, they've traded through the financial crisis, they've traded through the other debt ceiling issues we had earlier in the 2010s. And the consistent theme is, this is the best time for opportunities, this is the best time to build companies, this is the best time to thinking about investing before the trend reverses again. So I thought that was quite encouraging. But back to crypto for a moment here, regulation is a concern. right? So when you think about adoption, when you think about innovation and trust and confidence, what's your message to regulators?
Well, my message to regulators is to look back through history. When we're regulating industries appropriately, two or three things are happening simultaneously. Number one, the government's going into the industry and saying, okay, who are the fraudulent people? Who are the bad actors? What do the bad actors do? Number two, let's set up a self-regulatory organization for crypto like we have for the broker-dealers. We have FINRA alongside of the SEC, so you have sort of a belts and suspenders approach to the regulation. So let's figure out what the bad actors are doing, let's put a self-regulatory organization together, and then let's work together to come up with a list of propitious regulations that make sense to grow the industry, make it more transparent, and remove as many of the fraudulent people as possible. Remember, Bernie Madoff was probably one of the most regulated people in the world, and he still committed a fraud. So we're never going to fully escape fraud, but we could put something very sensible in place, but it requires us to do what Franklin Roosevelt did with Joe Kennedy back in the 1930s. And I don't understand why we can't do that. There seems to be political pressure to over-regulate the crypto industry and potentially push it offshore of the United States. When the regulators tell you that they have rules in place to handle digital assets, I disagree with them. It would be like you and I saying, well, we invented the car, here are the traffic rules. Oh, wait a minute, now we have an airplane, but let's use the road traffic rules to give us guideline to how to run the airplane traffic. It's just not workable, it doesn't make sense. They get really mad at me for that because I guess they're anchored into these political positions, but look at how the punchback is happening from the large-scale crypto guys. Grayscale saying, wait a minute, you're being arbitrary and capricious in terms of not allowing us to have a cash ETF. There is a Bitcoin futures ETF. Coinbase is saying, excuse me, we're going to sue the regulator for more clarity and guidance in terms of what we can do. And I find it very odd that their S1 was approved, the prospectus was approved to go public in the United States, but now all of a sudden the business that was stamped and approved of by the SEC is no longer a business they like. And yet there's been no regulation guidance, there's been no legislation, and I think that in a country like yours, we have to fix that. We have to be very calm and very commonsensical about it, as opposed to overreacting the way we are right now.
Well, of course, we don't want all this innovation to go overseas. Anyway, that's part of it.
Well, it's going to be human capital flight,
right.
Dollar capital flight, and you'll end up in a situation where you'll threaten the mantle of US financial services leadership. The Bitcoin is not a threat to the US dollar. And people that think this a threat to the US dollar don't really understand it. You'd be way better off building these systems, building the architecture for fintech and DeFi in the US. It'll strengthen the economy, keep our lead in financial services, and of course we both know with a much stronger economy, more vibrant economy, the dollar is stronger, the country is safer, the tax revenues are up, the economy's growing, and your kids and my kids will do better than us.
Well, I mean,
and that's the America that I want to live in.
Well, me too. But the fact of the matter is, I think in the US we tend to think about Bitcoin and other coins, where they're trading, what the volatility looks like. The fact of the matter is, Anthony, around the world, people transact business and they are growing their economies with digital assets. It's already happening.
Yeah, and listen, I mean, I think it's clear that the UK made a mistake with Brexit. They've hurt the London financial capital standing in Europe, and so they're open to Bitcoin and they're open to the digital asset space because they want to regain that mantle. What's going on in Hong Kong I think is very instructive. The Hong Kong government has gotten licensure now from Beijing to open up businesses for crypto, to bank crypto, to allow for crypto licenses for trading and so forth. The EU has relaxing standards related to crypto. There are several cash ETFs in Canada. It's very hard for me to believe that the beacon of hope for the world, the country that has done more innovative things in healthcare, financial services, cars, technology, the internet, all of these great, wonderful things, we're now going to have our regulatory authorities crimping down on what could be one of the most transformational technologies in the world over the next 50 years. And what I would say to your viewers, when you're thinking of the blockchain, think of it as this wonderful delayering mechanism. If I can go to a restaurant and you and I can bypass the 3% charge from the credit card, saves money for the consumer, saves money for the restaurant, and possibly leads to higher wages for the staff. I have a delegation from El Salvador here, economic ministers, that work with President Bukele. There are 3.5 million expats from El Salvador that live in the United States, 5.8 million El Salvadorans. They send money back to their family members. Most of them are unbanked. They have to go to Western Union or MoneyGram. They're charging anywhere from 6 to 15% on the wire transfers, taking cash and moving it into a wire and sending it to mom. The El Salvadorian government believes that they can save $400 million a year if they can create wallet-to-wallet transfers over the blockchain. So when you stop and think about this wonderful delayering mechanism, this trustless system, because it's so decentralized that you and I can have a one-to-one transaction without a third-party intermediary. Think of the major innovation that could mean and the unleashing of additional capital for innovation in the society. And when you think about it that way, you got to take a step back and say, wait a minute, I want my country to be involved in it. And so I don't get it. I know that the horse and buggy people didn't really like the horseless carriages. I know people said that the airline industry was a fad and there would never be any commercial aviation. Bill Gates himself said that the internet in the 1990s was a fad. He's a brilliant guy, so of course he switched his position. But we've got to get more people to really understand what it is. And as they understand it, they'll embrace it because it's good for the country.
Right, well, I mean, of course, and this is every iteration of technology, to your point, horse and buggy, the invention of highways and how that connected us, the internet, look at what that's done, the medical advances that, we have antibiotics, we have inoculations. I mean, every single iteration of technology and advancement, it's scary at first, but then look at where it takes us to when you get to that. I mean, AI, that's what we're talking about now today. It's scary, it's going to take away human jobs. We say this every time there's an iteration in the advancement of technology.
I'll just say this, we in 1998, we had 4% saturation of people involved in the internet, meaning 4% of the global population was connected to the internet. In 2023, we have 4% of the population that's connected into cryptocurrency, meaning they have a wallet and they have some digital assets. So we're at that very early stage. And I can remember talking to investors and corporations in 1998, and many of them did not have an internet strategy, and many of them did not have a website. Can you think of one company, large or small right now in the world, that doesn't have a website? Right? At least in the United States, almost every single one of them does. And so my point is, as we start to gain adoption, and we start to exponentially grow adoption, you have a finite supply of something like Bitcoin. I think those prices are going to go up a lot.
Perfect segue for my last question. At SkyBridge, you started as a fund of funds, pivoted into crypto 2018. Now I'm hearing more about private markets. How do you make these distinct decisions in terms of where you're allocating your capital and thinking about investments?
It's a good question. I would say the same thing about this conference. If you came to this conference in 2012 or 2015, it was in Vegas, 2,000 people, very high profile speakers, celebrity-like speakers. I cut that. I shrunk this. This is about 1,000 people, and these are very high content, dense trade B2B speakers with great capital introduction, because the world changes and you have to adapt with the world and sort of go where the puck's going. I went into digital assets because when I came out of the White House after I was unceremoniously fired, I did learn a lot about what the Fed was thinking about in terms of asset digitization and potentially having a US digital dollar. And I said, okay, my God, if they're going to do that on the blockchain, that means I got to get up to speed on the blockchain, learn more about it, and put some more investments in that space so that I can, get my clients into the future. As it relates to private assets, we've had a debacle in private assets in 2021. The public markets have basically seized, you know this at the Nasdaq, your IPO pipeline, if you will, is backlogged, and the spigot hasn't really opened. And we think we can buy private companies at very steep discounts right now, so we'll be involved in that. I think that the future, if I'm mapping out the future for SkyBridge, it'll probably have an acquisition at some point. We'll end up growing by acquisition because we've got this wonderfully rich environment. a great opportunity to market and raise funds for people. And we probably need a broader product list. And so I'm in the hunt to probably buy something over the next 6 to 24 months.
All right, well, we look forward to hearing about it. Thanks for joining us on Trade Talks.
And congratulations on your master's degree.
I know. Thank you so much, I appreciate that. And thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.